Hello, everyone. Hope everyone is doing well. Just want to point out some of the things to preview this week, hence the name Market Preview. Now, when you see what's going on in the market, when you get these themes, that's where your trading ideas come from. You can't go into the market with like a preconceived notion of like, I'm going to this, I'm going to that. You can't tell the market what to do. And no one in the history of mankind has ever been able to tell the market what to do. Conspiracy theories aside, and I'm a big conspiracy theory person, so if you got any good conspiracy theories, fire away and send them to me. But when it comes to the market, the best traders, it's almost like the best offense is a good defense, right? The best traders figure out what the market is telling them, and then they react appropriately. They don't try to attack the market because the market can beat off anyone. So, that was a little inappropriate. All right, well, let me take that. Let me restate that. The market can beat anyone. All right, so let's just start off with the S&P 500. This is usually where we start at stockmarketdriver.com because it is the most important stock indice. So we're trading above this 412 level. We've been 11 level. We've been here for like a month or two. Check this out, though. You go back to last year, May, 411, it's where we hit resistance. 411, it's where we had support. 411, it's where we hit resistance. Resistance, support, once again, we're up there. One of the most important things to understand about the markets is that there are some price levels that are more important than others. And sometimes we know, sometimes we don't know why, but we just need to know 411 is the important level to watch on the downside. If we get down below that, there's probably an opportunity for some short-term trades for you SPY traders, you option traders, and of course, SPY or the S&P 500, which we're looking at now, is just I call it the mothership. It's like the broad markets, the 500 biggest stocks. But within the stocks, there are different sectors, and we're going to go through them because sometimes if a sector looks enticing, there's something within this sector that looks even more enticing. A sector is just the aggregate of what's in it. So by definition, there's going to be things that are more enticing and less enticing. So anyway, here's the S&P going back a year, 411. This up here is about 417. So this week I'm watching 411 to 417. If we break 411 on the downside, 400 is probably going to be the next place. See how there's resistance. So before I go much farther, let me just explain. Resistance here becomes support, right? There are investors who sold, and they thought they were the kings when they went low, when the market went lower. But then when it goes higher, a lot of them say, "Oh, I made a mistake. I want to buy my shares back, but I'm only going to do so if I get them for the same price I sold them at." So if you have enough remorseful sellers placing buy orders to the level that was if you have enough remorseful sellers placing buy orders, the level that was resistance becomes support. Very important principle in the market. Now, the opposite side of that is the buyer's remorse. You have people who buy, and when the price goes lower, they regret buying, and they try to get out at break even because they don't want to take a mental mistake or they don't want to lose money. So if you have enough remorseful buyers placing sell orders at the level that was support, it can turn into resistance. And we can see that here in other examples here, right? So support becomes resistance, resistance becomes support. All right, so let's get a closer look at this here. Now, for you shorter term traders, you day traders, kind of really doesn't even matter what your style is. If you're a longer term trader and you don't really worry about day-to-day stuff, I think what's kind of going on now is really not important to worry about. If you're a longer term trader investor, we care about major bottoms, major tops, and we can pretty much identify them when they're happening because if you watch the market every day, it kind of comes self-evident sometimes. But anyway, now this is the SPY year to date. So there was resistance around 417. Probably going to be resistance again if we get up there. That's because there are investors who bought up here who regretted doing so when the market went lower. They tell themselves they made a mistake, they want to get out, and they're going to be placing sell orders at the same level that they bought at. you got to understand, everyone, if you really want to know how these markets work, you got to understand this is psychology. We are looking at investor psychology. We're not looking at tea leaves. We're not looking at, astrology. We're not looking at paranormal quantum camera, although some paranormal quantum camera is pretty good if you ask me. But anyway, the best traders know that the important things to focus on are which levels are important, what are their trends, what are the momentum. All right, 417 is an important level for some reason. I don't know why it's not 418 or 419 or 416. It just happens to be 417. So if we get up there, there's a good chance there's going to be resistance again. Now 408 is an important level, right? It was support. It became resistance. Remember that buyer's remorse. Buyer's remorse. People bought. The price goes lower. They regret doing so. They tell themselves they're going to get out if they can get out at break even. So if you have enough remorseful buyers placing sell orders, the level that was support turns into resistance. That's what happened here. Now we have the opposite. The level that was resistance turns into support. Seller's remorse. People sold here. They thought they were hedge fund gurus. The market goes higher. They tell themselves they made a mistake. They want to buy their shares back, but only if they can get them at the same price they sold them at. So if you have enough remorseful buyers, well, actually, no, I said that wrong. If you have enough remorseful sellers placing buy orders at the same level they sold at, the level that was resistance can become support. So this week, 1417 on the upside, 1417 on the upside, 1408 on the downside. If you're a day trader, you just want to know where these levels are, because if SPY gets down to 408, there's a good chance it rebounds, and whatever you're trading, most likely, tech or financials, it's probably going to bounce. If we get up to 417, there's a good chance that we move lower. Now let's think about that. Okay, why is it that when things get to resistance, they tend to sell off quickly? And why, when things get to support, they tend to bounce? Well, if you're an investor and you want to sell and you're watching the price going higher and higher and higher, you're like, oh, this is great. But all of a sudden it gets to a level, in this case, let's just say 417, and you notice it stops going higher. So you say to yourself, gee, if it stops going higher, there must be sellers around. The only reason why something is going higher is because the buyers can't find enough stock or whatever it is that we're talking about, cryptos or commodities. But in this case, stock, they can't find enough sellers to fill all of their orders. So they're forced to pay higher prices, and that forces an uptrend. When we get to the price where all of a sudden the supply side or the sellers can kind of overwhelm the buyers, well, we stop going higher. So a trader sees the stock's going higher, it's going higher, it's going higher, it's going higher. Oh, it stopped going higher. Oh, there are other sellers around. Gee, I'm afraid I'm going to miss it. I wanted to sell it at 417, but if someone undercuts me, the buyer is going to go to them, because the buyer is going to go who's ever willing to offer the lowest price, right? If you want to sell at 417, but someone else wants to sell at 416.50, that's who the buyer is going to go to. So the sellers start to undercut each other. Okay, someone might go to 416, 415, and we start this snowball effect. Same thing happens on the downside. If you're an investor, you're watching a trend, you're like, I want to buy this stock or this ETF. It's going lower, it's going lower, it's going lower. All of a sudden it stops going lower. What do you think? Oh, gee, there must be other buyers around. That's why it stopped going lower. The sellers had to sell at discounts because there were not enough buyers around. But now there's enough buyers or demand side or investors who want to buy that you can sell all you want. So the price stops going lower. So some of the investors who want to buy start to get freaked out, and they start to think, gee, I better pay a higher price. So the seller will sell to me, right? Like if you're willing to pay one price, but there's a other buyer who's willing to pay a higher price, well, the sellers are going to go to them. So the big thing about trading is just knowing which price levels are important. So this week we're going to look at 417, we're going to look at 408. If we get to either one of these levels, I would be expecting some kind of reversal. And if you're a day trader or SPY trader, you're going to be able to make some money there. All right, let's go see what the next thing I was looking at. And I say that because I did this morning, and I kind of don't remember, but I'm just being facetious. Of course I do. So here's technology, 10 months, biggest sector in the market. Resistance becomes resistance. Once again, people bought here. Market goes lower, they regret buying. They tell themselves they're going to get out at break even. There tends to be resistance at former peaks. Okay, it's not mythology. It's not like some kind of like psychobabble. It makes sense if you can understand psychology. There are investors who bought around 151 last August. Price fell off, or the price fell out of bed. They tell themselves, "Man, I'm just going to hang out. If it gets back to 151, I'm going to sell, get out at break even." Market finally gets back there, and you got these remorseful buyers trying to get out. Enough of them placing sell orders at the former resistance level. Guess what? It's resistance again. Here we see resistance become support. Sellers, this is kind of the opposite. Sellers, but it's the same concept. People sell, price goes lower, then it goes higher, and they tell themselves, oh, I shouldn't have sold. I want to buy my shares back. So you have remorseful sellers placing buy orders at the level that was resistance. So remember, levels that are resistance can stay intact for a long time. Levels that are support can stay intact for a long time. Levels that were resistance can become support. Levels that were support can become resistance. Some levels are more important than others. It may seem simple, but if you can just kind of dig that into your soul and make that part of your subconscious, it will make your trading career not only successful, but a hell of a lot easier. So in the tech sector, 151 on the upside, 144 on the low side. You're trading Apple, you're trading Nvidia, you're trading, tech stock XYZ. Just pay attention to these levels because in some way, shape, or form, they're going to follow the sector. This ETF, it's a SPDR, S&P 500 depository receipt. This tracks this sector. And if you're trading a particular stock, it's not the be all and end all, but in my opinion, it's a good idea that you know what the sector is doing because it's very hard to trade counter trend. In other words, if the tech sector is going higher and there's a stock in the tech sector that's, not Nvidia or Microsoft or whatever the next stock is down on the list there, well, it's hard to trade counter trend. In other words, it's going up, it's hard to be short, it's going down, it's hard to be long. So sometimes the broader sector can kind of be more important than what's going on in the individual stock or part of the sector. Now let's go over to financials, right? We could see here this JP Morgan resistance, right, for, I don't know, what's that, January through March. Resistance here. Big rally, gapped up, 138 is kind of the level to watch. It closed at 138.73. Support became resistance. Remember, there are people who bought here who regretted doing so when the market went lower. The company comes out with good earnings. They're like, oh my gosh, I'm going to take advantage of this move higher to get out. So there tends to be resistance there. Now check this out. If this goes lower, this is something you really should pay attention to too. This whole concept of the gap, right? Notice how there was no trading from here to here. A gap is when something, in this context of looking at days, closes at a level and opens at a different level. That's much higher or much lower, in this case, higher. So think about it. There was no trading in here. Stock didn't trade there. So if there's no trading in there, well, then guess what? There's going to be no one who sold who is now remorseful because no one sold. So one of the reasons for support is that we have remorseful sellers placing buy orders at the level they sold at to try to buy their shares back. If we never had any sales, there can't be remorseful sellers. So if this reverses, and this is one of the things that I think is on my, well, I don't think, but I know, it's on my trading list, there's a good chance we could get a rapid move back lower down here. My price target would be around here because, as we know, levels that were resistance can become support. Remorseful seller is going to be trying to buy their shares back. In these levels, well, no one sold. So if no one sold, then there just by definition can't be remorseful sellers trying to buy their shares back, right? Okay, let's go see what's next here. Now, this is one of my favorite ways to find trading ideas. I look at the sector. In this case, we're looking at the consumer staple sector. And we just have what I was telling you about, just all over this, inarguably about this. And I kind of say that because a lot of academics are like, oh, charts are like, whatever, blah, 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 blah. Yeah, well, it's like they say, well, I don't want to say anything bad about academics because I want to become one. But anyway, if you looked at this as logic, you're just never going to figure it out because humans are illogical. This is psychology. People who bought regret doing so. They sell their shares when they get out of break even. People who bought regret doing so when the price goes lower. They sell their shares to get out of break even. All right. So we're back up to this level. And check this out, we're overbought. Now, this is the staple sector. What is overbought? Well, the vast majority of time, a market will stay within its typical or historical trading range. That's why it's called typical or historical. If it gets aggressively bought, like to the point where it's a little bit overdone, well, we call that overbought. And that'll bring buyers into the, or sorry, sellers into the market because they're going to be expecting a reversion to the mean. If we get below that, investors are going to be coming in because they're going to be buying and they're going to be expecting a reversion to the mean. So overbought conditions attract sellers, oversold conditions attract buyers. Here we have oversold. Now this indicator down here, and you can check this all out on our website, but the relative strength indicator is a simple, common, logical, efficient way to measure momentum. When the blue line gets above this red line, it indicates overbought conditions. So we're overbought in the sector. We're also at a level that was support and I was at resistance. We know some levels are more important than others because I just explained why. There's a principle in markets. Overbought markets that get to resistance tend to sell off, and that's what happened here. Overbought. We got up to this resistance here. We sold off. So anyway, we have a sector that's overbought and at resistance. So what's the next step? Let's look within the sector, because remember, this is just the aggregate or the average. And lo and behold, here are the components of this particular sector. Consumer staples, which are companies that sell products people need if things get bad. And, I don't know why anyone would need pizza, or I'm sorry, pizza. That's probably unheard. I don't know why anyone would want Pepsi or Coke if the world was coming to an end. I can understand the booze part, the Mondelez. But I mean, I don't know who makes these sector definitions. And believe it or not, on Wall Street, it's kind of a debate. Like, why is Pepsi in the consumer staples? Like, wouldn't Pepsi be something you drink when things are going? But whatever, we're not going to be able to change anyone's opinion. But what we can see is, oh, gee, we have a sector that's overbought and at resistance. Let's look at these individual companies to see if we can find something that looks really enticing, like an attractive trading target. Oh, and lo and behold, Coca-Cola. Support at 63. We know support can become resistance. There are people who bought here, have regretted doing so since January. They tell themselves they want out. If it gets back to their price, it's overbought. That's going to bring sellers into the market. It's also at a level where there are a lot of remorseful buyers trying to sell. So you have this double whammy, right? You have overbought conditions bringing people that want to sell into the market. You have being at a level where a lot of remorseful buyers want to sell. So you got these two dynamics for people to want to sell. So there's a good chance it goes lower. So this is on the radar screen. Make sure you check back. We're obviously going to be following this week. I mean, it's Coca-Cola. It's not like it's a high-tech, biotech stock that can move hugely. But sometimes there's opportunities kind of off the beaten path. So remember, it's a principle. Overbought stocks that get to resistance tend to sell off. So this is on the radar screen. It looks like it might make a move. The best traders look for things that look like they're going to move. If it looks boring, if it's in the middle of the range, well, it's an equilibrium. We want things that are out of equilibrium, right? Not enough demand to fill the supply, not enough supply to fill the demand, That's where we get the moves. And then before I go, I just want to point out oil because oil could be getting set for another move higher. Resistance, well defined around $82 a barrel resistance. Is it becoming support? Has seller's remorse turned a resistance level into support? It's probably going to take another day or two, maybe 3 or 4, to figure it out. But if oil can hold above this, then next move is probably going to be higher, right? Things go down faster than they go higher. When things go higher, it's like a slower kind of staircase. So if over the next 3 or 4 days oil holds 82, it's probably a good time to look at things like Mobile or some of the oil ETFs. Okay, everybody, thank you so much for checking in with this day's preview, and I will see you tomorrow for tomorrow's preview. Have a good night.